Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review, which is the combined data cycle and flow cycle reviews as we go forward for last week, which was Monday the 26th of the 7th to Friday the 30th of the 7th, 2021. We've written up the weekly model flows for you to save time. We're going to start this as we do the rest of it to get us cracking anyway. So the week then, Monday the 26th to Friday the 30th, the last trading week, euro dollar plus 100. So over that period, the euro dollar as a FX pair gained 100 points or pips, euro yen plus 4, euro pound minus 16, pound dollar plus 144, pound yen plus 55, and the dollar yen minus 76. If you plug that in, you get a negative unopposed driver in the dollar at minus 320. You get no backdoor flows. The opposing positive flows mainly going into the pound at plus 215, into the euro at plus 88, and into the yen at plus 17, which was the positive rock. Activity plus or minus 320. So over last week then, we had an unopposed negative driver driving the market. So flows were being sucked out the dollar complex to the exclusion of all else, and mainly going into the pound, and with a bit of backdoor flows into the euro, and the yen was pretty static. Excuse me then. Right, so we're going to start there, and so don't go away. Right, welcome back. This is what's been happening to the asset classes over the week then. So the US dollar index basically got pumped up, it came back, and it's last week it's come back a little bit off its lows. It's 0.31 from the high, so it's come off about a third. Gold has been sort of soft, but it came back a bit, but now it's off 0.45 from the high. Oil has been strong, it came off, and it's now 0.20 from the high. Wall Street then has had this sort of treble top sort of look to it, and it's just sub highs. S&P has broken the resistance. It's had a new peak, and it's just come off that. Tech similar, except it's now parked at the previous resistance breakout point. So equities high, but they've come off just a little bit for the weekend. US 10-year then, this is the price of the bond. So basically the price shot up, yields came off, the yields came back a bit, and now the yields are coming off again. It's 0.20 from the high. So that's where we are with the bund, which is the European equivalent. Basically it's significantly broken in terms of price, so yields are pretty soft in Europe at the moment, relatively speaking. They're soft in the US, but arguably euro yields are slightly softer than the US at the moment in model terms. Copper then had this sort of chopping period for ages. It did a massive breakout to the upside. It's now come off a little bit. It's 0.31 from the high. It's lost about a third of its uptick. US steel then has been soft for ages, and it's now about 0.40 from the high. So it's above half marks. The infrastructure deal arguably has helped that along. So we're going to stop that there, and we're going to look at the data cycle now. So don't go away again, please. Right, welcome back again. We're going to have a look at the data cycle for the week then. So China, this is our version of the economic calendar. We've modeled tier 1 and tier 2 data and sort of condensed it into a numerical number, and then we looked at trends and flows in those numbers. So data cycle then for China for the is currently neutral. The data cycle for the dollar is neutral to negative. Germany, it's mixed. So it's positive on tier 1, So tier 1 is very positive, and tier 2 is very negative. The euro is positive generally. Let's have a look. The yen is positive. The pound is neutral. The CAD is neutral. The AUD is neutral to negative, and the New Zealand dollar is positive, and the Swiss is neutral to negative. Right, so that's that. Let's have a look. So what have we got? We've got the euro as a standout positive data cycle, with the German so-called engine of Europe in mixed terms, but its tier 1 data is pretty strong. You've got this strong New Zealand dollar, and China's neutral. The dollar data cycle is starting to roll over. It's peaked in our view. So anyway, there we are. What's going to knock it about next week? Well, Monday the 2nd of the 8th, which is the first trading day, we've got German retail sales, US manufacturing PMIs. And Tuesday the 3rd, we've got the Reserve Bank of Australia rates decision. And later on, much later on, we've got New Zealand employment change. And on the 4th, the Wednesday, we've got AUD retail sales. So you can see that we've got like a conjunction of AUD and New Zealand tier 1 events, and that's likely to have quite a significant effect on our trade. So what are we doing? We're long EUR dollar, pound dollar, pound Swiss, pound New Zealand, euro New Zealand, AUD New Zealand. Right, so you can see that we've got quite a chunk of our trading at the moment is revolves around New Zealand dollar and the AUD, and quite another chunk of it is being long the pound, and basically short the dollar. So that's where we are. The trades have come back a fair bit, but we've been scaling into that. So we've got larger positions, but the overall position has deteriorated slightly, it's fair to say. Right, so that's where we are. We've got mixed picture on the data cycle. If you look at the flows, we've had a week of the dollar, the USD, with flows into the pound, and overall, and it may not have felt like that. And the yen, given the way the equity transmission has ended up pretty much static. So that's where we are as we move into next week. Thank you for watching. Catch you again for the Monday daily briefing. Thank you.